We talk about financial independence, and that's our big mission, is helping people achieve their financial independence and self-reliance. That sounds very broad, but it really isn't. It's actually very specific. If you could help people in your community not worry as much about how they're going to pay the rent, how they're going to put food on the table, wouldn't your community be a little bit better off?
For community FIs of all size, growth is always an imperative, and always looking at how you're going to do that and the approach to do it and how that works into your strategy can be a difficult leadership task. Today we have with us Gary Golden. Gary's the CEO of BHCU. They have a history going back to 1952, and they're currently at about $240 million in assets. In 2015, they converted to a community charter for Delaware County in Pennsylvania, just outside of Philadelphia, and more recently expanded their charter to Chester County. Gary, thank you for being with us today.
It's my pleasure. Thank you for having me.
So, as we were talking about and we set up here, growth is really one of the major strategies that you've been working on. Hey, what have you done as of late, and how is that affecting your approach to how you're leading the credit union?
So growth is job one for us right now, and that's basically, we believe, out of necessity. It's getting very difficult to survive at the smaller levels. Credit unions everywhere, our size or smaller, are kind of suffering under the burden of technology requirements, cybersecurity, compliance, and all of those consumer protection rules that are coming in for consumers, which are good for them, but they make it more difficult for the smaller players in the financial services arena. So you really need to get to a size where you can have the foundation and the infrastructure that you need in order to meet all these regulatory requirements and technology requirements in order to compete. So we need to grow to make sure that we have that scale. And more importantly, we also believe in the value proposition that we provide for our members. We believe we have a good mission and a good purpose, and we want to share that with as many people as possible.
So we talked about how you had converted your charter just a few years ago after 60 plus years of history. How did that play into it? How did you come to that decision as that was the approach you wanted to take?
So really, it was a defensive measure because as a SEG, credit union, or a select employment group, what that means is you had to be an employee of the company. In this case, for us, it was Boeing Helicopters here in Delaware County, in order to join. The problem with that is, while you have very loyal members at that point because they feel like you're part of them, even though you're not owned by Boeing, you're a separate financial institution that is regulated, by the state, and has nothing to do with them operationally. But those people feel very attached to you. You're on their property, you're local, and all of that. But the problem becomes if something goes wrong with that company. In our case, if government contracts dry up and the plant closes or something like that, you're probably out of business. So in order to make sure you have sustainability and can be around for the long term, it made some sense to say, hey, we should probably look at other areas where we can expand and get new members. And for us, that was converting to a community charter so that anyone that lived, worked, goes to school, or worships in Delaware County could then become a member. At that point, we operate more almost like a community bank, but we just don't abandon our history either. Our headquarters is still here next to the Boeing facility here in Ridley Park. And we continue to pay homage to our roots, of course, but we are adding branches throughout the county. And as you mentioned in your intro, we recently expanded into Chester County, and we'll be adding some new locations there as well.
So how did that change your operation, how you do community outreach, go to market, all of that, when you suddenly shift from a very long history of having a very focused, member set, community set that you were geared towards, to something broader, I guess we'll call it like that?
That is the challenge, right? Because you didn't really need to do a whole lot of community outreach because, again, the community wasn't able to participate with you. And you flip a switch, and now you want to be there for everybody in your community. And it's really, we decided to do sort of boots on the ground. There's different ways that you could go about this strategically. We didn't have the wherewithal at our size to just do mass media and a bunch of television commercials and radio, things like that. Those weren't really very effective for us. So what we did, we redirected our marketing dollars into individuals who could go out and pound the pavement, boots on the ground, and just meet with people and be there and make sure that they knew that we were in their community. We're part of that community. We live here as well. We work here and kind of in that community together, and that their financial journey is something that we're on with them.
So was that people who were already working at the credit union, or were you out recruiting different talent for that?
So we have some long-term employees that are still with us that have been here for many years and have been through the transition, but it definitely required the influx of new talent. And as we opened up new branches and new locations, naturally we had to grow to staff those offices as well. And we tried to do that with, again, people in the community who live, work, and are just like, somebody you'd be walking down the street with. And as a result of that, we have a lot of members that are small business owners and things that we meet, the places where you'd get lunch or get dinner, the people running the local deli, they're now members.
Now, I know one of the things that's one of the segments that you go after is additionally small business as well, right? Not just individuals that you're going after. Was that new? Did you add that when you did the community expansion?
We a little before that. So I started with the credit union in 2013, and I'm a commercial banker by trade. So it was a natural adaptation for me to bring that here. Most credit unions don't play well with the commercial space or the business space. Some do, but a lot of them don't, particularly the ones of our size. They tend to not do that because it's a bit more complex. You need a little bit more expertise, some commercial lending and credit experience that may not be there in a smaller credit union. But what we learned pretty quickly was our community, our new community of Delaware County, is filled with small businesses. There's a lot of mom and pop shops. There's a lot of contractors, electricians, plumbers, a lot of blue collar jobs that needed services, financial services that tend to get ignored by the larger banks and even some of the larger credit unions. They get lost in the shuffle. So there was a real need here. So if we're going to say we're going to be in this community and we're going to serve this community, well, our community is filled with small businesses and small business people that are underbanked and underserved. So it became a natural niche for us. And the fact that it aligned very well with my experience was just a plus. So that's become our primary growth engine. About 70 to 75% of our new business or our new members come from small businesses.
Wow, that's an impressive, and I guess maybe non-obvious growth factor that you're going after. Because so you did the change in charter, you did additional branch, like more branch footprint out there, your community outreach, your outreach to small businesses. And that was what, SBA deposit, like merchant services, things along that line?
So all of the above. We do SBA, we have merchant services, but it could be something as small as, basic lines of credit, financing a vehicle or a truck for the local plumber, all of those things. Then what you also get there, it's from a growth perspective, it makes sense because not only do you get the business as a member, but you get the owner as a member. So it's one interaction, but now I have two members instead of just one. And what typically happens is you might get a spouse. You then get hey, my son's going to college, and he needs a car. Do you guys do car loans? Of course we do. Uh, and his suppliers, his network, his vendors. When I said 75% of our new business our new members come from businesses. About 75% of those are referrals from existing business members.
Mm-hmm.
It all sort of ties together, and that just further embeds us in the community that we serve.
So very, very classic relationship banking and expansion that way. Got it. Okay. So what else? So we talked about change in charter, expansion to the community, your branch footprint, your expansion to businesses. What else are you looking at? Like, what other levers are you pulling from a growth standpoint?
I would say technology. So we recently migrated to a new online and mobile application, bringing that much more up to speed with the kind of things that you would expect from some of the larger institutions. It's a pretty slick app, and we're really excited about that, and we're adding new features to that all the time. It's a very dynamic application, so it'll continue to expand the capabilities. But that also gives
was there a core change in that, or was it just your mobile experience?
Okay. Core change. Yeah. This sort of sits on top of that. Mm-hmm. And it's something that's needed. In today's market, consumers expect technology, right? So, and the self-service angle. And I'm no different. I use my phone all the time for banking transactions and things. So people want, need, expect that. So if you're going to compete, you better have that. And where our focus is still face-to-face, we're continuing to open up branches and new locations. The industry as a whole might be consolidating some. You read about that all the time, shutting down branches or reducing the expense and the overhead necessary with the old bricks and mortar. So they're leveraging or leaning more into the technology, but that's not quite our business model. You need it. You need the self-service option because the people want it. They need the convenience. They can't always get to you. But again, if you're going to really be true, and we're going to say we're about relationships that we're building in our community, then we have to physically be there. I guess maybe I'm a bit old school, but to me, it's sort of the bane of social media. You lose some of that personal interaction, and it's all about, I want likes and my Facebook likes or my Instagram likes or whatever. I have so many followers. You don't know any of those people. And I'm not really interested. So we don't do a lot of that. We have those things, of course, and for community events and announcements and things, but I'm not interested in those things. I'm interested in the personal relationships that we can build upon. But the technology,
and I certainly don't think you would see the growth you've seen from such a wholesale shift in business model if it were all digital from that experience standpoint, or at least from an acquisition standpoint. Not saying you don't have the experience down.
No, for sure. And I worked previously in a prior life with an organization that was completely online. It was an online bank, and that was a national organization though, and they had massive amounts of capital and scale, and that was fine. That was their lane. But in the credit union world, for us being a small community credit union, it's still about the people. So again, you've got to be there. But in terms of our growth, the fact is I can't put a branch in every town in the county. So in order to serve people that might not have a local branch, I need to provide them with those abilities. So we're trying to do that.
So if we're talking about growth, we're going to have to touch on M&A at some point. Like, has that been a consideration for BHCU? How do you think about that? Is it, a third rail for you, or like what special challenges does that present for you?
So it is something we think about. We would love the opportunity to engage with other credit unions who might be like-minded and have similar values and cultures, and be able to sort of pool our resources together to help, again, achieve that scale that I talked about earlier. But it's really difficult in the credit union world. It's not like a bank. We're not publicly owned. There's no stock to go buy. You can't take somebody over, involuntarily. So it's, again, it goes back to relationships, oddly enough, that you have to just plant some seeds, talk to people, and build up trust over time. And if you can come across somebody that, again, is thinking the same way you are, maybe your service areas overlap. It might make some sense to at least have some conversations. But as I said, in the credit union world, people tend to be very protective of what they've built. It's important to them. That's why they're in this side of the business and not just the public sector or the banking sector. They're trying to do something a little bit different, and they're generally pretty passionate about it. So they'd be very careful about who they want to partner up with, because they don't want to alienate their brand or their members. So, I get calls all the time because of our success from larger credit unions asking if I would like to become part of their larger organization. That is not something that we are interested in doing, because we do not want to become a bank or bank-like, because you would lose all of our entire purpose. And, it's not something that we're willing to do.
So there's an element of growth, but not growth at all cost. It's measured. There's probably a rate at which this makes sense, right? Where you're able to kind of maintain what is unique and special about you and your culture, right? Is that... For sure. And some of that might be a personal bias. So, I have a lot of colleagues who are CEOs of much larger organizations, and I tell them all the time, hey, stop calling yourself a credit union. You're a bank. You treat your members like customers, their account numbers. You've lost it. Is that a subtle dig? Is that an insult?
Absolutely.
Okay.
Yeah. It's not subtle either. I'm hitting more per head with it. So, if you said to me, hey, I have a plan for you, I can grow your credit union to $10 billion in the next 2 years, foolproof, guaranteed you'll get there. I'm really not interested, because I think we would lose our purpose. If we wanted to do that, we could obviously do it. We could be part of something bigger, but we would just kind of lose our identity, and that's not what we're trying to build here.
What about credit unions buying branches or territory or assets from chartered banks? Do you have an opinion on that? Is that something you've considered?
Sure, we would consider that. I don't think there's anything wrong with that. It would typically be a community chartered credit union, like we are, as opposed to a select employer group credit union, whereby they might have some difficulty assimilating that existing bank's customers into theirs, because they may not qualify for membership or something like that. But it really makes no difference whether it was a small community bank or another credit union. Ultimately, those bank customers who would now become members of that credit union will have a decision to make. Is it something that they want to continue to be part of or not? But certainly buying locations, accounts, and things like that, sure, why not?
No, this has been great, Gary. I really appreciate the insights here. Any kind of final thoughts on this, or where you want to leave us with how you're thinking about this?
No, I just think that it's something that it's important for all of us to have that purpose. We talk about that a lot internally, and that is something that drives us, and it's why we do what we do. And we let people make the choice, right? So we don't sell products and services. We have them, we offer them, we try to connect the dots for people about why it's a good thing for them. But it's all about doing something that is helping the community. We talk about financial independence, and that's our big mission, is helping people achieve their financial independence and self-reliance. And that sounds very broad, but it really isn't. It's actually very specific, because if you think about it, if you could help people in your community not worry as much about how they're going to pay the rent, how they're going to put food on the table, people didn't have those worries, wouldn't your community be a little bit better off? I mean, look at, divorces happen. What's one of the number one reasons? Because they fight over money, right? Families break up over money, and it fractures things in the community. You lose strength that way. And we started a Kids Foundation for at-risk youth here in our community, because again, there's a need for that. So, and a lot of that comes out of lack of resources for our youth. So, if you could elevate sort of the rising tide raises all boats approach, if you could elevate the lowest common denominator there economically, you're going to improve your community that you live in dramatically. And who wouldn't want to do that?
Great. No, good story. Got it. If anybody's interested in BHCU or in you, where can they go to find more information?
So they can certainly find us online at bhcu.org. You can email me anytime at gary@bhcu.org. And, we are always willing to engage with like-minded folks. And, the cooperative spirit of credit unions is alive and well, and it's one of the motivating factors for us.
Thanks for being here, Gary. Really appreciate it.
Sure, my pleasure. Thank you.